Good evening, all. Ira Epstein with your Spider ETF stock market wrap-up, and this wrap-up is for the evening of Wednesday, and we're here now at February 1st, 2023. Okay, my friends, you talk about doing a bad job in a press conference. In my opinion, the Fed chair did it. He was hawkish. The statement coming out was hawkish. They see some disinflation coming in, but it's a big battle. They're going to hold the plan. They're staying where they're at. The vote was unanimous, blah, blah. Then the press conference came. So this is a dance step. It's a 1-2. So the first step coming out of this was, okay, we saw what the Fed did. The stock markets were all down, by the way, all right? The NASDAQ was the one kept flirting with going higher, but you were down probably at the time of the release of the announcement and shortly thereafter, about 300-400 points in the Dow. And then the Fed chair started his conference, and the questions came right out as they should. Hey, what about the rallies we're seeing in the stock market? You're really not breaking much in the interest rates. If anything, there's all the pressure the other way. Markets think that you're going to blink, things of those nature, okay? And I think that this was one of his worst press conferences. He wasn't as hawkish as he should have been. I think the message to be sent is we're data dependent. We're going up in February. We'll probably go up in March. We'll see what the data looks like for the meeting after that. But when we're through, we don't see ourselves pivoting down. That was not the message given. And the swaps market hit it. And they hit it hard. They went the other way. And if you get my full research, or if you get a trial to it, you can get that all on our website for free by going to iraepstein.com, free offers. I show you the charts, what the swaps did afterwards, and where you're at. Interesting. Do I think that the Fed is going to waffle here? No. I think it was a bad performance by Fed Chair Powell. And everybody can have him. I think he generally is right on the money. I, for 1 minute, and I want to go on record, I do not think you're looking at a break back in interest rates this year like the swaps market does. I'm betting on the man. The man doesn't want to be associated with what happened to Arthur Burns or Paul Volcker. He keeps mentioning it. And they're not going to come down, stay, drop, and then go up in rates again if they have to. The only time he'll drop rates is when it's 99.9% certain that they're hitting their goal. Do you understand? You don't have to agree with me. That's what I believe. Was the communication of that bad? Yep. What do I teach you? I teach you that the hardest thing to do in a market is go through these reports. Why? You can't move fast enough to get out of their way. The algorithm traders are going to beat you all the way through because it's not people, it's just a computer. They're looking for keywords, phrases, and they're moving all over the board on you. Okay. You have two events tomorrow that will be muted for the stock market, but there you got to watch the European Central Bank, the Bank of England for their monetary policy. Then we're going to get the unemployment claims, and then you're going to get Challenger Gray and all these other numbers that you want to see, leading into Friday's jobs report. So you still have another leg to go with, and the traders will look at all these and say, where do we go? The ADP numbers today were a disaster. 106,000 jobs. You know, market was looking for 80,000 more. The JOLTS number, the job openings number, was the other way. Even the Fed chair mentioned now we're pushing the record of almost 2 openings for each person that can work. That's a strong labor market. He didn't carry the day well with all this. That's all. Everybody has an off day. I think this was an off day. What will happen now is the Fed members will all go and start speaking. You know how that works. They will shore up all this that he did and clean this up over the next month. And then we'll get to March and he will be a different person at the March meeting. Okay? That's what will happen. In SPY, you're up and away. So the market now is trying to clear the resistance points that we had back here. See that? Here and here. Okay? Would you think you're going to keep raising rates and the stock market's going to go up? It was poor delivery. That's what created this. The pattern is higher lows, higher highs. You had a bullish crossover. What the heck am I talking about there? Let me teach. I'm not going to show this on every chart. You're getting right here this day. You have the red line under the gray. This is the 200-day average in this particular chart and the 18-day average. When you get over it, which you did here, and you see how the market was down even on that day, it normally means that before you go down and take out the most recent lows, that's my rule of thumb on it, you're going to make an attack of that high. I don't know if you'll get through it or not, but you're going to try to get back up there. Here's the market yesterday, and this is the market today. I've hit my number. Okay, what else? Well, now you're going to get bullish, and I'm telling you, hey, if you were my client and you're talking to me on the phone or we're writing each other, I'm telling you to step out of this market right here because the odds of staying over the upper Bollinger Band for any real length of time, near zero. 5% of the time, you'll do it. Okay, you want to play for that? Fine. They build the casinos by giving back payouts on the pull machines and the tables of a couple of percentage points so you can win. But 90-some-odd% of the money's going to put up the new casino, improve the strip. You do understand that. Well, think of it that way. You're taking that bet over there. You will get a winner every now and then. But it's going to snap you, okay? It's just the way it's going to work. That's how the algorithm's designed. It doesn't mean that you can't come in and buy the market at a better price because you're embedded. No reason you can't. It's up here that I think the pros are going to take their money off the table. You have the embedded reading in LIT, which tells me that I'll be looking to come in again buying these type of markets. Now, I am concerned in this chart because generally speaking, the first challenge of the 200-day average in a Bollinger Band, you play around it, but you don't really succeed in going anywhere for a bit. I wouldn't be surprised at that. Even Apple got a nice bid. It is embedded. So the market came down today. Look at that outside day up. Now, what should not happen for the next 48 hours is taking out the low of today. If it does, the odds favor you're going to go down to 138.03 or wherever the 18-day average comes in. If the market goes up, I contest with you that it will get into a big resistance area and have a lot of problems from 147.94, which is the gray line, the 200-day average up to the upper Bollinger Band. I think it's going to get caught between the green line, which is the 100-day average, to that. AMC hit all that I wanted it to on the pullback. It hit 2 days ago, the 18-day average. This was a bull market break. That's what often happens, and you culminate there. If you look at my other videos tonight, you see I talk about that in other markets. XLF, again, you're up to the upper band. This is where the pros take some money off the table. Until you lose the red line under 79, there's a way they buy the market. I teach it in my enhanced Bollinger Band course on our website, iraepstein.com, under the word education. It's all there for you. Then XLI, again, you're up to the resistance. So market after market, to me, this is the areas where I think the pros are taking money off the table. Same with stocks. The first challenge of a Bollinger Band in about a week and a half. You've held on to the embedded reading so long. Nothing wrong with that. But I do think the pros are taking money off. Do I think they have to come out of the whole position? No. You cut your position down when you're embedded. But when you lose the embedded reading, you're out of the whole darn thing. And you add on pullbacks, but there's a certain way to do it. It's all laid out in the course. I'm not going to spill the beans here. Here's the home builders. You know, they have just been super strong. I added today ITB in my morning videos that I want you to join me on, by the way. At 9 in the morning, I record my morning video, and in it, I review 40-some-odd stocks and ETFs for you. I added ITB today. I think it's that important. You're up at a zone where I think profit-taking is overdue. The market is bullish as can be, but on pullbacks. You don't buy over Bollinger Bands. What are the odds of staying over that black line? 5% of the time. And each successive day over it, maybe I should come back to it. Each successive day over it takes away, in the way that I teach this, 1% of that 5%. So yesterday you were over it. So I got a 4% chance today that I'll stay over the black line. Now I have 2 days in a row. I have 3% chance of staying over it the way I teach it. That is not a bear signal. It is a signal because you're embedded to take money off the table the first time you hit it, and we'll wait to see if we get a buying opportunity one more time in it. That's how I teach all that. Then an XLE in looking at it, going from the upper band to the lower band. Energy markets, because China hasn't yet picked up. And people are questioning how bad are the COVID cases. You can see they don't release any numbers. We don't know what's going on, but we'll be looking to see if they're buying a lot of oil. In GLD, well, you're overbought. So the trend has been up, but you're overbought. I wouldn't deploy new money at a market like that. Silver, is this where silver is going to finally try to break out of this sideways action? We'll find out. The trend is up, but it doesn't mean anything to me. This is what matters. This sideways action told you you're going to get chewed up in this. You're going to get moves to try to break out to the upside, they fail. To the downside, they fail. Let it eventually succeed. This will end up being either a base or a top. My gut instinct is it's going to be a base because I think everything is going to get inflationary via China buying up everything as they throw money at their economy to go again. Copper market too, but as you can see, you're narrowing in the Bollinger Bands and you're overbought. Not the time and place to be in it. It's got support at the 18-day average, but not the time and place to be in. TLT, I didn't want you to go into bonds or notes into this. I was very clear about that. I see big resistance in the market at 108.92, the upper Bollinger Band to the 200-day average at 109.10. And I have a market that's already overbought. Any reading in the 70s is overbought. You own it. I wouldn't want to. That doesn't mean it can't go higher. I wouldn't want to. There's better ways to deploy money. Last in the dollar index, hey, getting down to the lower band that got beaten up. What are you supposed to do the first time you hit a Bollinger Band and you're oversold? If you don't know by now, you're never going to know if you watch my show. And what do you do in the FXE the first time you hit it? Come on, you know it. All right. So I want you to join me in the morning. I'd love for you to come in and see what we do. What we do is I go through 40 charts with you in the morning. And I listen to you. A lot of you will write me, Ira, can you cover this chart? Can you cover that? ITB was one of them. And I looked at it, I said, that makes a lot of sense. Others, like I've had uranium and all these lithium and whatever it is, we cover all this for you. And we rotate all the time. And the beauty is, while I mention these are the mainstays, all right? We're always adding and subtracting. And we're looking for buy and sell signals using a combination of daily charts and weekly charts. We're trying to catch trades you can hold on to via the weekly and looking for the trade charts on the dailies. Does that make sense? You get a double-handed play there, a little bit for everybody. Now, I'll be doing bonus videos now that we're getting through all the updates, and this updates being the central banks, the numbers from the jobs. I'm ready. Tomorrow I'll probably start in the futures markets, and I'll be going into the spiders ETFs to do it. How do you join me? It's simple. You go to our website, and it's in the research area. I can't make it any clearer than that. You can also move your cursor up here. It'll take you right there. I'm Ira Epstein. You have a great day. I'll see you tomorrow. I can't wait for the trade. It's going to be exciting. Take care.